Hi guys, today's March 23rd, 2012, and in this video we're going to discuss two more questions, show you today's trades. Another good trading day. We had another one and done. In fact, it's only about 9:45 in the morning when I'm doing this video. We well, let's go ahead and just do that first. We had a normal system entry. Now, it wasn't at a no zone. This NSC at a no zone happened about 8:30 in the morning, so that's not valid. But nice NSC right here. Took it down for a nice winner. In fact, we had a pullback trade as well. Another nice winner. Looks like we had another winning pullback trade, and we have an NSC underway currently. So really good day, really good week. We've had a lot of one and dones this week. Nice to see that. We don't get that a lot where we see them every single day. In fact, I think we had them 3 or 4 days this week. So it's typically average. There's times we'll see a one and done 2 to 3 weeks straight, and it's really great because you're in, you're out, you're in, you're out, and it's nice, quick trading days, quick income. But that's not the way it is all the time. We got to take losing trades, and we have to recover from them. And that's what trading is all about. But let's go ahead and stay on topic, and let's do some questions. First question, and this is a question I'm getting a lot, and I really want to explain it so you guys understand why I'm doing this, and that's why close down your trading course if it's such a success? Well, the fact that it's a success or not a success really isn't relevant. Back in 2007 when I launched the site, I made it clear that I taught this one-on-one, and I'm going to now go online, but I was only going to do it for a limited time. And I really at that time didn't know how long I would do it for. And I really like doing it. And again, we're not going out of business. We're still going to be here doing this. We're just going to do it a different way. Probably going to do some live classroom trading instead of online courses. And the reason why is this. I give support. Guys, this is not a $97 ebook that you download. If it were, there's no reason to turn off the course, right? Just keep advertising and just sell it $97 ebooks. You read it and learn what you can from it, and then you move on. But that's not the way I do business. I teach you how to trade. I personally teach you how to trade. 40, 50 videos. Then we're in the trading room. I'm doing one-on-one phone calls with you. I'm doing emails back and forth with you. And it's a lot of work, really. I mean, when you take on a couple hundred students and you spend all day with them, that's a lot of work. And I love doing it. I love doing it. It's great, and I'm going to continue doing it. But it's time to downshift a little bit. I don't want to bring in new students every day. I just don't have the time. Okay, if I continue to sell online and we continue growing at the growth we're experiencing, I won't be able to personally support you. So business-wise, it's great. I can hire someone else to do the work. I can kick back and golf. Well, I don't really golf, but you get the point. But that's not what I'm doing this for. I'm doing this to teach you how to trade. I want to be teaching you. Sure, I've got people helping me, but I want to do it. That's what I do. That's what I do best. And again, I don't want to deteriorate that if I keep taking on students. Again, it's just I won't be able to give everybody my all like I do now. So it's time to pull the plug on the online course. And again, anyone who gets the course, who already has the course, nothing changes for you. You're going to get every bit of me, all the support, all the calls, everything that we do. And that's going to keep on going. Then, like I said, we'll take a few months and maybe we'll do our first class third or fourth quarter of 2012. We'll come down here to Jacksonville, do 15, 16 students, and we'll teach you live, which I like the idea of that. Most of I'm doing my first advanced live class next week, and I'm looking forward to it because there's a lot of things I want to show and teach that's way easier to go over face-to-face. Videos are great. Live trading rooms are great, but that face-to-face content is a good thing too. I can really get my message to you. I can really do what I want to do. So if you want to wait for a live class, that's fine. I can't give a date. I can't give a price. That's still in the making. It will happen at some point. But so that's really it. I want to make sure, in a nutshell, I want to make sure that you get the personal attention that you're paying for. And I'm at the point where I don't feel if we can keep doing it month in, month out. So therefore, we're just closing it down. There's a lot of trading systems out there, and there's always a lot of hype about, if it's so good, they wouldn't sell it, or if they could really trade, they wouldn't do it, this and that. And most of it's BS. But you know what? If I didn't know how to trade, I wouldn't take down my course. Okay, the fact that I'm going to take down my course means that we're not going to bring in money selling my course. So fortunately, I do know how to trade, and that's the way I want to get you. I want to teach you how to trade so you can do this for a living. All right, that's kind of a really long answer, so my apologies about that, but let's move on to the next one. According to your strategy, what is the financial risk per contract per trade? Good question. I believe yesterday we talked about risk versus reward. They kind of go hand in hand, right? NSE max tick, max loss 8 ticks. EET max loss 6 ticks. Pullback max loss 6 ticks. And we said average NSE loses 4 to 5 ticks. EET loses 3 to 4 ticks, and a pullback trade will lose 6 ticks. So it's really simple math. If you're risking 8 ticks, that's $100 per contract. So if you're trading 5 contracts, you're risking $500 of your money. So if you got a $10,000 account or $20,000 account, whatever it is, and you take max loss, you'll lose $500 if you're trading 5 contracts. Again, that's if we hit max stop, which we routinely do not. Normally 4 or 5 ticks. So if you lost 4 ticks, you'd lose half that. Then $250 if you're a 5 contract trader. So good question, but yeah, just take our max stop loss, and that's what it is. But let's really quickly talk about commissions, well, really margin. I personally use a minimum of $3,500 per each contract I trade live. Okay, so if I want to trade 10 contracts, I want to see $35,000 in my account. I realize most brokers will give you day trading margins at 500 to 1. So if I've got $10,000, I could trade 10 contracts, 20 contracts based on that $500. Well, that's really stretching the rubber band thin. I don't suggest doing that because, again, it sounds really good. 1 point a day, 10 contracts, $500, 100 grand a year, compound it, works out beautiful. Math doesn't lie. But here's the problem. You've got to account for losing trades. You have to account for losing trades. I tell you, my system's going to make a point today, and it did. And it did it on the first trade. But what if it happened on the 7th trade? What if we lost a trade, recovered, lost, kind of went back and forth? When you have a little period of drawdown where, let's say, we're down 3 or 4 points, and you're over-leveraged your account by trading 500 to 1, you're going to take a big chunk of your trading account out by the time that drawdown reaches its bottom. And at that point, you may not have enough money to continue trading the contract size you are. In fact, you probably won't. And then let's say you're trading with 10 contracts, you're down 4 points. And now all of a sudden, you only have enough contracts to trade 5, or enough margin to trade 5 contracts. Now you've got to recover double as many points. It just doesn't work. You're working yourself backwards. We're going to take losing trades. So trading with a nice cushion of leverage is the way to go. So again, 3,500 to 1 is my personal minimum. So that's what I do. Now some do more, some do less. A lot of people do 2,000, 2,500 to 1 once they understand the system. But you cannot go in there trading at 500 to 1 because at some point we're going to have a drawdown. It has to happen. We have to take losing trades just like every other trader out there. And therefore there's no reason to pull the rubber band that tight. Okay? So that's my video for today. That's my video for the week. In fact, we probably will not have much next week. I'll be in class all next week, and I'm really going to focus on my live advanced students, so probably won't blog until I get back next Friday night. So have a great week. We will be doing email support as quick as we can, but email Al. He'll be a little more accessible than I will. And again, if you have any questions, get with us, and we'll get back to you as soon as we can. Enjoy the weekend. Happy trading, and cheers.